I'm going to dovetail off a video I made a couple weeks ago, and it was entitled How to Buy a $300,000 House for $1,000 Out of Pocket. Now, that was tremendously excitable to a lot of people. I got a lot of calls, and I thank you for that. But in the course of that, it appears that I didn't answer a lot of questions, or some questions anyway, that I want to cover today in a new program. So I'm going to give you a new program today. It's going to be how to buy a home with 1% down using a conventional loan. Because normally a conventional loan is 5% down, but there are income restricted conventional loan programs that allow you to do only 3% down. And now for a temporary time, you're allowing that 3% to go to 1%. So we're doing a 1% down conventional loan, how to acquire a house with that. So with that in mind, let's kick off this rodeo right now. Hi, everyone. I'm Kevin Fagan. I'm the Mortgage Patriot on your side, here nestled in the hill country of San Antonio, serving proud Texans and great Americans all over this country. So before I get into the content, please, as before, hit the like and subscribe if you would, please. It helps me and it helps you as I continue to build my library of YouTube videos. I've got lots of great content, as most of your subscribers already know. And for you new people, look through that content. You'll see strategies on how to buy a property with very little down, as we're talking about here. Strategies on building your investment portfolio if you're an investor. I have strategies on buying a home before you sell your current home, things of that nature. So lots of very good, interesting topics. So again, hit that like, subscribe, and check out my videos. So here we're going to talk about, once again, 1% down, conventional loan, and go through the nuances of that. So let's look at that right now. So here's what I'm going to cover in this short video. I'm going to give you an overview of the 1% conventional down program. I'm going to tell you what qualifications you need. I'm going to go over the concept of area median income, AMI, area median income, and why that's so important to this program and to a lot of programs for that matter. And lastly, I'm going to talk about how much you need to make per month to buy X amount of house. So in other words, if you make $5,000, how much house can that buy in today's market at today's rates? And then I'll wrap it up with a concrete example so you can see the flow of this and understand it more fully. So let's get into that right now. So as I talk about this program, I want to distinguish it up front against the video that I made that got everybody so excited. In that video, when I talked about buying a $300,000 house with only $1,000, that was a complete strategy of 3 different concepts, where I use an FHA loan combined with a down payment assistance program, combined with seller concessions. All those things together brought the closing costs from about $18,000 down to $1,000. So that's still a very workable situation, but that's not a loan program per se. This I'm talking about is an actual loan program, 1% down conventional loan. So you're still subject to closing costs. So in other words, if you buy a $200,000 house, your out-of-pocket costs are going to be more than $2,000, which would be 1% of $200,000. You're still subject to closing costs, which are a function of the down payment, in this case 1%, the actual closing costs, and funding your escrows. Now, having said that, we can use the same strategies as we used, or some of them anyway, in prior videos, where we're getting seller concessions and other things we can do to bring down the actual cash out of pocket. But for now, we're talking about a program of just 1% down on a conventional loan. So let's talk about some of the eligibility requirements of this loan, and they're very, very few. So the first is credit scores, your FICO scores. Those have to be at least 620 or better. So, and remember, if you don't have 620 scores and you're pretty close, I can get you there in a matter of time. It's only a few action steps to take, and I can outline those for you, and we can move you from say 600 to a 620, hopefully in a month or less. And refer to this video because it's extremely good, talking about how do we rapidly increase your credit score. And you're going to find a couple of tricks of the trade that I show you and I'll help you with that'll move your score 20, 30, 40 points in no time at all. So your credit score is good. We want to get it ideally over 640, and if we can, even over 660. Why? Because as you increase your credit scores, your pricing increases, your interest rate decreases. Your lender's going to give you a better rate if you have a higher credit score. And what does that mean? That means a lower payment for you. So just makes the house more affordable. You can buy more house if you have a higher credit score. Just that simple. The other eligibility requirement is that of income. This program, this 1% down conventional loan program, is a income-based program, an income restricted program. In other words, if you make too much money, sorry, you can't access the program. Just that simple. So how does it work? Well, it's based on this notion of AMI, area median income. That is a number established every year by HUD, the Department of Housing and Urban Development. Every year they come up with this AMI figure, and it usually goes up a little bit every year as inflation goes up and property values go up. So right now, for example, for 2023 in San Antonio, this is kind of where I am, but I can show you other areas as well. 2023 AMI is $83,500 for a family of 4. They established the AMI figures for a single person, a 2-person household, 3-person household, 4-person household, and so on, all the way up to about 7 people, I think, till it goes off the graph. But so here is an example of the 2023 matrix of the AMI figures. And why are these important? Because all these programs, and the one that I'm talking about today, the 1% down program, is based on some factor of 100% AMI figures. So again, for example, if this program allows for up to, but not to exceed 80% of the AMI. So if you have for example, if you have, as we look at this graph, a household of 3 individuals, let's say you're married and have 1 child, you're allowed up to $60,000 and some change per year and be at 80% of the AMI figure for San Antonio. So this program, the 1% down conventional program, you cannot exceed 80% of the AMI, which is in this case about $5,000 a month or $60,000 a year. Hopefully this makes sense to you. And you can see as you look across with your eyes from 1-person household to 8-person household, what those levels can be. As you increase your family size, of course, you're allowed to have more income and still be a part of this program. Let's spend a quick minute before I get into the example of how much you make and how much that will buy in a home today. So for example, again, this is just the San Antonio, Texas area. Your area is going to differ greatly. Because why? Because of property taxes are different. Maybe home insurance rates are different. And whatever the interest rate is at the time that you're actually purchasing. So this is an example. But if you make, let's start off with $4,000 a month. If your salary or your household income is about $48,000, okay, you can afford about a payment, a housing payment, which includes principal, interest, taxes, and insurance of about $1,525. So how much will a payment of $1,525 purchase today? Again, it's going to vary, but in San Antonio or around, given the tax rates and so forth, you can control and buy a home of about $160,000 to $165,000. So I'll repeat that if you make $48,000 a year, or your home collectively makes $48,000 a year, $4,000 a month, you can control your payment can probably be around $1,525 without exceeding things. And with that payment, you can control or buy a home today at about $160,000 to $165,000. If you make $5,000 a month, or your family makes $5,000 a month, that's $60,000 a year. Your payment would be, you can control a payment of about $1,850. That payment would control a property home of about $200,000 today, given all the factors I've mentioned. So hopefully that gives you a feel for if you make about $4,000, how much you can buy. And if you make about $5,000, how much you can buy. If you make over that, a couple things will happen. You're going to be over the AMI figures we talked about anyway, and other strategies will probably come into play. So for purposes of this loan, around the $4,000 to $5,000 level will get you $165,000 to about a $200,000 house. Hopefully that helps you. So as I show it an example now, again, we're just summarizing. All you need is a 620 score or better, and I can help you with that. And you need to be at 80% or lower than the area median income. And it depends on, again, how many people you have in your household. So let's look at a real live example, because you're not going to want to be able to handle this program over about a $200,000 house. So really this is for, I'm going to resign this example to houses that are really between, say, $175,000 and $200,000. Why? Because anything below that, you're not really going to want as a house anyway. But you can buy a decent home, at least in our area, between $175,000 and $200,000. In your area, it may not exist, or there might be plenty of them. I don't know. And I can help you find it. I'm also a realtor, as you know, and my team is national. So in your area, if you're wondering, I can connect you with a great agent who can show you if there's houses in that $175,000 to $200,000 area that you can afford and that are desirable. So let's look at some of the examples right now. Let's look at a $200,000 home purchase example using this program. So 1% down, obviously $2,000. 1% of $200,000 is how much the down payment is. But that's not the end of the story, as you hopefully know, attending my Patriot Nation videos. There's three buckets. The first is the down payment. The second is the true cost of the actual closing and loan. And the third is the escrow funding. So we have down payment covered. That's $2,000. So true costs, what are they and how much they cost? Well, true costs are appraisal fees, survey fees, title fees, underwriting fees, processing fees, government recording fees, all sorts of fees. All that is going to cost about $4,000 to $4,500, I'm just estimating. And to fund the escrows, what is that going to take? Well, it's going to take, it depends on your property tax expense and your home insurance expense, but that's going to be about $3,500 to $4,000. So the second and third buckets are going to cost you about $7,500 to $8,500. Add that to your $2,000 down payment, and you're talking about anywhere from coming out of pocket for $9,500 to about $11,500. That's that's a fair amount of money. So we talked about in the strategy of how to buy a house for $300,000 with only $1,000 down. We talked about combining seller concessions into this whole strategy. You can do this as well on this program. So if to the extent that you can get seller concessions, will be how much you can lower this total closing cost bill. If you get seller concessions of $5,000, then your out-of-pocket cost will be anywhere from $4,500 to $6,500. Makes a big difference. So I can help you with those strategies as well. Now, you probably will use other strategies besides this program. The reason and the time that you will use this one particular program is if in this scenario, you're married, for example, and you are the chief breadwinner, but your spouse has a lot of debt because on an FHA loan, which this is a conventional, remember, on an FHA loan, you have to combine all your liabilities of both spouses, even if they're not on the loan. In this example, with this program, you do not have to combine your spouse's liabilities. So that's probably the time that you would squeeze this program in versus some of the other strategies. But either way, I will guide you through the process because there's numerous strategies, numerous programs, numerous options on how to get this deal done. I'm the Mortgage Patriot on your side. Let me help you out and make it a great one, folks.